and I got brought on board to help lead that effort, and ended up chairing the standards board, the SASB standards board, up until the time when it was consolidated into the IFRS Foundation last summer, and then was appointed to the ISSB. And so, that has, for the last 10 years, really become the central part of the way I think about accounting these days. And that includes the way I teach it, what I teach in the classroom. I teach corporate sustainability now through an accounting lens at a graduate and undergraduate level at UT Austin. And it's the focus of my research, and of course, the work at SASB and now the ISSB. So it's pretty exciting. I wouldn't have expected to get to this point, in terms of like what I spent my time on, but because I hadn't really anticipated that accounting could actually speak to sustainability issues. It wasn't on my radar at all, but it's been a pretty exciting transition over the last decade.
Wow. Now everybody can see why I was so excited to have this session and moderating this conversation with you. And to be fair, I don't want to do this alone. For all of you that are listening to us right now, I'd like you to put on the chat where you are turning in from, what is your company? Let us get to know you. And throughout the session, please share your questions. Today, we have Better Impossible, a person that can walk us through the future of these sustainability-related disclosures and how that will affect jurisdictions, companies. So it would be great if you guys can share your questions and something that you have in mind that you'd like to know. We'll try to address as much as possible. Shall we get started? Sure. Let's begin by addressing this growing emphasis on sustainability within financial reporting. And I know, Jeff, this is an area that you are an expert. How does IFRS view sustainability reporting in relation to traditional financial accounting? Tell us, are accounting systems being disrupted?
Yeah. Well, in a lot of ways, yes, they are. Maybe just for a little bit of context, the way I've been thinking about this recently, kind of thinking of different eras in sustainable investing, different eras in sustainability reporting, different eras in sort of like corporate accountability. And I think I was thinking about this earlier this week. I suspect that like the concept of sustainable investing in capital markets has probably been around since capital markets first were formed. It's in the absence of very good accounting systems to focus on earnings, it was probably very natural to then be thinking much more holistically about the ventures that investors were considering putting their capital into. But I think, what we had kind of then seen is that, for 100 years, we had a development of financial accounting standards, largely coming from stock market crashes in the 1930s in London and in the US. And then, like a launch of a whole system of financial accounting standards to make sure that what we knew about what companies had as assets, what they owed as obligations, what they were earning, at least that could be verified in some way, that could be truthful, because there was a lot of concern about fraud at that time. What I think about now is that increasingly over the last 20 years, there's been a focus on sustainability, corporate sustainability. And that was largely coming out of, I think, like environmental disasters, other types of catastrophes, things that created a sense of outrage from the public, a need for some accountability. But that didn't immediately, I don't think, turn into, companies communicating to investors or investor awareness around the importance of sustainability. For me, that that has lagged a bit of the focus on sustainability. We saw really kind of in the early 2000s to around 2010, I think, a big increase in the extent to which companies were voluntarily providing sustainability reporting standards. Sustainability reporting disclosures, producing some sort of corporate responsibility report. And it's really only in the last 10 years, maybe even like the last 5 years, where I've seen a huge pivot in the extent to which capital markets are really quite focused on asking for specific disclosures on sustainability issues, and where companies have started to direct their sustainability disclosures more towards capital markets participants. So, is that disrupting the accounting system? I think if you talk to chief accounting officers or chief, financial officers who have to think about what systems do they have in place, and do they feel comfortable with the information flowing into those? Do they feel comfortable with the knowledge that their people have to gather and communicate the information that they're now being asked to think about? I think there's probably a sense of some disruption out there. Yeah, for sure.
So illustrate to us with an analogy, why ISSB standards are important. This is a question that we see all over the internet. Everybody's asking, is this really important? Tell us why in a very simple analogy or example.
Yeah, maybe the simplest way I would think about this is that one of the things that we're trying to do at the ISSB is really bring the rigor of accounting to sustainability disclosure. If I think a lot of companies have been doing a really good job trying to tell their sustainability story for many years now, but even the best efforts to do that, and maybe some of those weren't the best efforts. Maybe some of those were the best efforts to make sure that in response to bad news, you looked like you were trying to be good, right? So there's certainly that natural inclination. But even companies that were trying to do the very best they could to be objective and fair in presenting their sustainability issues, that doesn't naturally turn into the most useful information that investors are going to need, because they need to know that peer companies are going to be communicating on comparable issues in a way that actually is comparable, and so rather than getting confused with whether or not, do they look the same because they are the same, or are they in fact actually different, or vice versa? If they look like they're different, are they just employing different methods to calculate, say, like their greenhouse gas emissions, and so that's the reason that their performance might look a bit different. So, what we're trying to do is bring the rigor of accounting to sustainability reporting, and I think that that's really important, and it's fundamental to the IFRS Foundation's mission, which is really about trying to facilitate, these well-functioning capital markets on a global scale. And in order to do that, capital market participants need a complete set of information to really understand not just the current performance of companies, but also to be able to kind of project out into the future what that's going to look like going forward. And so the IFRS Foundation concluded that establishing a second board was a great way not to change their mission, but actually to more completely fulfill the mission by having the IASB help to produce the guidance that would help companies around the world to produce financial statements, and then have the ISSB help companies around the world to prepare sustainability disclosure standards, still focused on communicating to the same user of financial reports, which is whether it's an equity investor or a lender or a debt and somebody working in fixed income or debt markets. So really trying to help them have a full, complete set of information. In terms of an analogy of what we're trying to do, it's also trying to do it on a global scale. And so you can think back to, in pre-2000, what we had from a financial accounting standpoint was really we had domestic accounting standard setters all around the world coming up with their own way to prepare financial statements. And that was widely seen as a challenge for global investors trying to compare the financial statements prepared in one country to financial statements prepared by a company in another country. And oftentimes, they're choosing between, because they're global investors, they're trying to choose between these two companies. Like, which one do they think is a better place to invest their resources? And so there was the International Accounting Standards Committee, but that was not really quite at the level that I think was needed to create a global, convergence around or agreement around what those standards should look like. And so the IASB was established. And one of the critical things that happened there is that IOSCO, which is the industry group for capital markets regulators around the world, they actually endorsed the IASB's standards and as fit for use to prepare financial statements around the world. And so that helped to really launch that. Now, the IFRS accounting standards are used in over 140 jurisdictions around the world. We're looking to try to do something like that with the ISSB. And in fact, IOSCO recently did endorse the ISSB's first two standards. But it's similar, but it's also different, I think, in a number of ways. Perhaps different because there isn't already such an established system in countries around the world for what would be required for companies to communicate on sustainability issues to capital market participants. And so that is starting to happen, and it even started to happen before the IFRS Foundation decided to establish the ISSB. So there's a bit of catch-up that work that's been going on, I think, in that regard, especially when we think about what's happening in Europe. But really, it's I think the idea is before there was a very fractured regulatory system around the world, trying to create a private sector efforts to bring a global solution to the needs of investors around the world on sustainability issues.
All right, so you are spot on. And one of the biggest concerns of the sustainability community is the amount of complexity we have now in terms of standards and reporting and the kind of data and information, different stakeholders coming up with different requirements. So the ISSB, instead of coming up with one standard, already came with two standards. They call it the S1 and S2. Let's get technical. Explain the difference of those two standards from ISSB. What is the big deal that makes it so revolutionary?
Yeah, well, maybe even one step before that. I think one of the things that we do at the ISSB with S1 and S2 is we've really tried to consolidate the relevant guidance that was out there by a bunch of different organizations that were trying to serve the same user, but through different methods. And so, since around 2010, I would say, you've had the development of integrated reporting, the SASB standards, the Climate Disclosure Standards Board, the TCFD, not to mention things like, the World Economic Forum's metrics that they focused on as well. And then, of course, you had like the long-standing efforts of like the Global Reporting Initiative. So what the IFRS Foundation did first when establishing the ISSB was get agreement among these private organizations that were focused on the investor needs and bring them together and say, like, can we actually agree to take all this intellectual property and consolidate it into one place, because it's still all trying to serve the same user. And so that's one thing that I think is really important to help simplify the landscape. And so as you look at what's in S1 and S2, it really is a holistic look at that guidance and in an effort to bring it all together. And so some of the ways that you could see that would be that, everyone here is familiar with the Task Force on Climate-Related Financial Disclosures and the 4 pillars there, focusing on governance, risk management strategy, metrics, and targets. So that approach, which I think has gotten wide acceptance around the world as being a useful way to think about how to provide decision-useful information on important issues related to climate. Well, that certainly is part of our S2, the climate standard, but we've actually even elevated that framework in S1 to say, it's going to be important for investors when you're trying to understand a company's management of its key sustainability issues, not just on climate, but anything that is a key sustainability issue for a company, that they're going to want that same approach for understanding, like, how is this managed, within the governance of your company? How is it brought into your risk management systems? What is your strategy? And I think that's a super important part that that had been kind of, in some ways, kind of like lost, because if you're only reporting out on some of the positive impacts you're having, or that you're trying to have, but not telling it from a strategic perspective, I think that's really where there's a disconnect from what investors really want to know about. And so we've really tried to do that, but then also taking, for example, like the SASB standards, which were quite different than TCFD, which was focused on one issue at a very high level. SASB's approach was to say, let's develop industry standards across 11 sectors, 77 industries, to say, given the type of business that you're in, what's typical in that kind of business model, in terms of the resources that you depend on, or the types of externalities that are a result of your operations. What are the key dependencies that are there? And really try to then identify performance metrics that could be useful for investors to, on a comparable basis, be able to think about which companies are actually executing on their strategies and performing better or worse along these key dimensions. And so that has also been brought into S1 to say, so think of S1 as being guidance to say to companies, you have to focus on the sustainability issues that are going to be important to investors, and those are the ones that are most likely to affect a company's prospects going forward. So that's going to be like your ability to, access capital markets, your ability to generate cash flows over the short, medium, and long term. And so, in order to do that, every company is going to have to not stop at just, what affects most companies, not stop just at what's in its own industry, but really speak to its own unique aspects. But in addition to that, one of the things that's required is for companies to consider the SASB standards that, they're not yet a required part of what companies would have to report on, but it's important that they at least look and assess sort of the relevance of the topics for their industry. And that's hopefully a way that then when companies say, these are the issues that we're trying to manage, and here's some performance metrics related to that for like companies, they're going to be reporting out on issues that are similar and preparing information in a way that's comparable. So that's kind of the goal. Yeah.
Right. Well, everybody can see we are having a master class, right? An actual professor and an expert in the field sharing with us the basic foundation and technicalities of the new standards from ISSB. And I think, Jeff, this is just the beginning of the journey, right? Because now we go to the next level of adoption. Many of the audience from Bravo comes from Latin America, and we have different jurisdictions in Latin America that would have to adopt the new ISSB standards. So can you tell us about the adoption journey, and at what speed we might see these standards being incorporated in the Latin American jurisdictions and even North America, the Americas in general?
Yeah, so it's a great question, and it's one that I would say is it's a little difficult to forecast, because when it comes to the idea of a regulatory mandate, then it's really a question of it's a political question, in a sense of like what do local governments really have the appetite to try to accomplish within their jurisdictions, and what do they feel is appropriate for companies in terms of readiness. So we're spending a lot of time thinking about that right now. One of the things that we had just recently released was effectively some guidance where we could help jurisdictions around the world to actually understand what we thought would be, kind of like best case, implementation or, application, really implementation of the ISSB standards. But then saying, okay, within that, we've built into the ISSB standards some transition guidance to help companies on this journey get prepared to report on a high quality basis. So we've got transition support built into the standards, but we also recognize that that can't possibly meet every need that's out there, and different jurisdictions will face different levels of preparedness and different levels of aspiration and different levels of need for capacity building. And so we're also trying to work with jurisdictions so that they can say, you know what, we're going to need a little more lead time than that. And so trying to provide guidance so that a jurisdiction can know if they say, okay, this is the way that we see implementation happening. For example, we think it's perfectly reasonable if a jurisdiction says, we're going to start with the largest, public companies out there and have the highest requirements for them to begin with, and then we'll roll out responsibilities, the requirements for smaller issuers or for private companies, on a different basis and a different timeline. That seems perfectly reasonable and something that we want to be able to accommodate, so a country can still say, we are effectively adopting. But then, some countries may say this is just not, an accommodation that we want for our capital markets, and so there could be some situations where we would say, like, well, that's not full adoption of the ISSB standards. And so, but it's really important that jurisdictions have some clarity around that, so that they understand, depending on the trade-offs, what would be effectively the outcome of different choices there. So that's one of the things that we've been working on. I think in the in Latin America in particular, there has been I think really some innovation where we've seen, for example, in Colombia and in Chile, where they have taken steps to pull in, say, like the SASB standards and make that part of their regulatory framework sooner, but before other countries around the world. And so some innovation there. One of the things that we're trying to do is also regularly communicate with each of the regions and give them a voice in the standards development process. And so one of the things that we have is a sustainability standards advisory forum. And so in there, we have representation from the Latin American and Caribbean community, so that we can also hear what are some of the challenges, what are some of the requirements that they're going to need more support on from a capacity building perspective, or what are the things that are relevant on the issues that they care about, and how are they going to be addressed in our standards. So we're also trying to listen. I think in North America, it's the U.S. is, we can probably safely say, is likely to be less of a mandated kind of jurisdiction. Probably one where what we've seen is, for example, with the SASB standards with TCFD, a lot of voluntary uptake, and I suspect that would be probably also what I would expect from the ISSB's perspective. But in Canada, if we go all the way north, they have a sustainability standards board that they've recently put into place, and they are currently looking at the ISSB standards to see the extent to which they believe they're appropriate for use in Canadian markets.
Right. It's impossible to talk about jurisdiction without looking at what's happening in Europe. And our colleague Facundo just shared in the chat here that's worth bringing in the CSRD implementation in Europe, right? That's clearly setting an agenda for the companies operating in the European Union. How do you see the relation between CSRD and the new ISSB standards?
Yeah, that's a really important, great question. So Europe deserves a lot of credit for really trying to be a leader. Now, I think the challenge with being a leader on it is they've written things into law, and they've had to develop their own standards to meet their own law's requirements, and so they've done that. And right around the time, I think, just they're almost finished with the development of the first round of development on the ESRSs, the European Sustainability Reporting Standards. So one way to think about them is they're cross-cutting. They cover environmental, social, and governance issues, and they're organized by topic. In some ways, that looks then quite similar to the structure of the GRI standards, although the exact structure is quite different. For example, I think I think the ESRSs have something like 4 social standards, and GRI has many more. I forget the exact number, but somewhere between, like, say, like 15 or so. But they cover a lot of the same sorts of topics as well. One of the things that the ESRS is focused on is they talk about companies needing to consider both financial materiality as well as impact materiality. And so those are 2 considerations that they're thinking about, because and the way I think about this is, they're not only trying to serve the needs of capital markets, but think about what's appropriate for the citizens in the EU. And so, because it is trying to reflect the EU's needs broadly. And so that's why they've got both of those perspectives. And so they're going to want information not only around what investors in European markets would want to know about, but also what workers or citizens would want to know about, and what the government would want to know about when it comes to the sustainability of companies' operations. So it's quite broad in its mandate. But the interesting thing then is that, well, since they are also trying to provide information that would be useful to investors, how do we think about how that lines up with what the ISSB is trying to do? Because what we'd love for the ISSB to be is a global baseline where we could get agreement around the world that, for capital markets, this is what we're going to start with. And then for local jurisdictional needs, we may add on additional requirements. And we think that that's, very appropriate, but it's very hard to get global agreement, I think, around those extra, the more policy-oriented issues. In some ways, the way I think about it is we have had financial accounting and tax accounting for 100 years. And what we've been able to accomplish is a lot of convergence around what it is that investors want to know when it comes to preparing financial statements. What there's a lot less agreement on is what's an appropriate way to tax a company. And it makes sense. I mean, like, taxes accomplish a lot of policy issues. And so that is necessarily going to be jurisdictionally specific. And so I think that's one of the things that, is why it would be important to, if we can, establish a global baseline. Now, because Europe had to move first, they had those standards already in development. And so we have spent a lot of time working with the EU while we were both in the drafting stage, trying to find where there's overlap and come to agreement on can we use common words? Can we mean the same thing when we're trying to mean the same thing? And if we're trying to mean something different, can we use different words to not confuse in that respect? And so Europe, the EU recently released also a table with like 3 columns to try to help the preparer community understand where do we see things that are going to be requirements only in the ISSB standards, only in the ESRSs, or in both standards when it comes to climate. We've only been able to do this right now for climate, in part because the ISSB hasn't developed a full suite of standards to cover all sustainability issues. We've really just laid out that S1 and then and dove in on climate. But over time, as additional standards were going to be developed, with ISSB standards, there's going to be a need to consider how that's going to be relating to the ESRSs. It's going to be a challenge, I think, but it's an important one, in part because of the widespread scope and reach of the ESRS standards.
Let's shift gears a little bit and talk about the impact for the C-level, right? The C-suite are now looking at all this movement, right? The corporate sustainability is gaining a completely different importance for the C-level. And people are asking, how should they react to the new sustainability related disclosures? Let's start with the role of the CFO. We're talking about the integration of these ISSB's sustainability standards with existing financial reporting standards. How CFOs should react to that?
Yeah, it's a good question. I think, One of the ways I think about this is that there are at least a couple aspects that are really important for CFOs to be thinking about. One is that, as information that's being prepared, well, maybe even taking a step back there, any communications that a company is making about its performance on any dimension, I think, it's really important for a company to have good management over or good oversight over its communication messages, so that they're not saying one thing about what they're planning to do to one community and then saying something different about their plans to another community where that might be in conflict. So even just from like a legal perspective, it's really important that companies have good oversight over what are they saying their future plans are, and make sure that there's not conflict there. But I think from a CFO's perspective, as you start to think about information being prepared primarily to be communicated to investors, then it's really important to make sure that they have comfort with the quality of the information that they are preparing, and also then make sure that they're in a position to manage those issues, right? If you're going to be talking about this to your investor community, you also want to make sure that you are in a position to be able to perform at the level of expectation that you have against the things that you're going to be benchmarked against. And so talking to those factors and building it into your strategy. And so I think that's where the role of the CFO is really important, because they often kind of hold the keys to where, to the capital within the company, and decide like where we're going to deploy more capital to, from a strategic perspective, and how do we want to allocate that across the different opportunities that we're facing. So that's really important. But another thing that's related to that is, once a company decides what its strategy is, it needs to think about how do you again execute on that. Some of that might come down to compensation, and thinking about what are the performance measures that you want to actually put into place for managers and executives, and to the extent that some of those performance metrics, if that relates to sustainability issues, any performance metrics that companies are offering to compensate on, I think, there's again a need to make sure that there's good control over the measurement of those performance metrics, because if someone's getting paid on it, you want to make sure that
Wait a second. So then we are talking about the role of the CEO and the board. Right?
Yeah. It's even
this making them like wake at night. How these topics now go to the CEO and make sustainability more strategic in their role?
Yeah, I think it really is happening, and I'm sure. I suspect every CSO that's with us today has probably had their own experience and story that they can tell on this, and I'd be curious to hear to learn more about those. But I think. But I suspect as different as those stories are, there's some commonalities, and there's probably like some similar direction. And I think even the existence of chief sustainability officers suggests that that sustainability has become something that is managed at a much higher level within the company than historically, where you had a health and safety officer or an environmental compliance officer that had responsibility for a company's sustainability efforts, but it was really isolated from the rest of the company. These days, you're seeing CSOs, many of these individuals that have been working in sustainability their whole careers, getting their role inside the company elevated to the point where they're part of the C-suite. They're communicating with the board, and I think it's probably been, my experience has been that it's a bit of a learning process in both ways, from both directions. It's trying to help the board see the importance of managing sustainability issues, that it isn't just a public relations strategy in the wake of bad news, but really a better way to sort of manage the risks that companies are facing and the opportunities that are out there. But then on the flip side, I think also, a need for the sustainability community, as they're having to engage in these conversations with the finance function, with the board, with thinking in terms of corporate strategy. You have to also speak that language of finance and strategic thinking in a lot of ways.
Yeah. You know, time is flying. For this first block, we see that our conversation is going through. There are so much things to talk about. Thank God we have a private session coming after this one, off the records, that we are going to go deep dive. But I want to end with a question that might take another entire session to that. And I want you to find a way to summarize that. But it's a very tricky one that gets a lot of people awake at night when it comes to the new IFRS standards. We know that IFRS standards in general have a universal nature because accounting is much more homogeneous throughout the world, right? Sustainability challenges are much more local and regional, like Brazil is not the same as Germany, for example. How to reconcile the universal nature of accounting standards with the local nature of sustainability aspects?
Yeah, I think that's it's a great question, and it is going to be, I think, a persistent challenge over time, to really tackle it well. Um, you know, one of the things that the ISSB is focused on is thinking about how do we do more? How do we talk about more than just what's easily captured in financial statements? And so, we are thinking about what I think it was like, in many ways, like the drivers of future financial performance relate to, how are you interacting with your employees? How are you using natural resources in a way that's going to, ensure that you have access to key resources over time? How do you make sure that your customers continue to want to do business with you, or your suppliers, right? So I think that there are many, many, many issues that you can't easily put into financial statements. That's not what they're designed for, but are critical for companies to manage well, really important for investors to understand if they're going to actually invest their capital in a way that's not myopically focused just on today's earnings. So it's really important that we do more, but I don't think we should fool ourselves and think that we can do everything that way. I think that there are going to be issues that are more regional, don't really relate to industry, but relate more to local communities, local conditions. And I think those are going to have to be tackled in another way. I don't think, in the same way that financial accounting standard setters can't do everything that the world needs or that capital markets need. I think the ISSB has a very important role, but it's also not going to be the only thing that is needed in addition to the accounting standard setters that are out there. I think we actually need, we're going to need regions and jurisdictions, local communities to actually come together and also like recognize what is important for their perspectives, for their natural resources that are at risk, for their communities, for the companies that operate there. What are the important issues, and make sure that they also address that from a transparency perspective as well.
All right, Jeff. And as everybody can see, this is just the beginning of the conversation. And we are at the end of this first part of our webcast. And I want to appreciate and thank everybody's time for being here, sharing the questions, being turned into this amazing topic. We're going to continue with the private section, and would like to invite you all that are connected here to stay with us. And in this second round, we will have a lot of participation. It's not about me asking, but about you sharing your thoughts. And Jeff, thank you so much for this first part. For everybody that wants to continue this conversation, we'll be talking about ESG factors, how to prioritize and address these factors. We'll be talking about how we relate to investors and the planet, what is more important, how we combine both. And we will be talking about the future of sustainability reporting with Jeff, enjoying the time that he is spending with us. Thank you